Well, today I'm going to do something a little bit different. I'm going to go on Reddit and I'm going to find one of the most popular discussed topics around shopping for Medigap or Medicare Supplement insurance. And I'm going to go through individual recommendations that people are promoting online to help other consumers or other individuals shop for Medicare Supplement insurance with these different sets of questions or topics to look into when it comes to Medicare Supplement shopping. Hi, my name is Mark Pripp. I've been helping people understand Medicare for over 15 years, and I've heard a lot and I've seen a lot. And you think Medicare is confusing, I'm going to show you a few reasons what is making that even worse when you go online and try to understand how to compare plans and which plan to pick. So my advice for today is understand where you're getting your information. This process is a lot simpler than you think. You're overwhelming yourself with all of the places that you are trying to retrieve data and information to make the decision. So I'm going to show you how not to become paralyzed by analyzing, better known as paralysis by analysis. So let's get right into this big topic that everyone is talking about. I've got my laptop set up over here, so I've got Reddit pulled up. I'm going to go through this topic and cover some of the subcategories and what those look like. So this individual posts, when evaluating a Medigap company, these are some of the things I typically look at. So the first one is the plan competitively priced today for the person's age and zip code? Great point. That is very important. Is the plan competitively priced based on your location? That's important. The second topic is, what has the company's rate increase history looked like over the last 5 or 10 years? Now, this used to be an important talking point, but it completely got washed out the window or flushed down the toilet in 2025. We used to be able to say, looking at history over the last 5 or 10 years, rate increases went around 5 or 7% per year. Pretty predictable. In 2025, we saw rate increases as high as 40% in the state of Illinois, 25% throughout the country in other areas. So when you're doing your research asking about the last 5 or 10 years, it's pointless. It does not matter, because nobody is going to be able to give you this information. Nobody. No agent, no broker, no company. They don't have access to this information. The only people that have access to what rates look like or could potentially look like is the actual insurance company's actuarial department. As claims come through and premiums come in, how much premium comes in versus how much goes out in claims is going to predict rate increases. That was fairly stable through the years, but in the last year or two, that has shifted significantly. And that's not just in the Medicare supplement market, that's in the group health insurance market, that's in the Obamacare market. 2025 saw the largest rate increases across all segments of health insurance. So I'm not saying it's not important. I'm encouraging you to not obsess about that, because nobody is going to give you concrete information about which company to pick that looks the best over the last 5 or 10 years. It's not going to happen. 2025 completely smashed that research trend. At the end of this video, I'll give you some tips and pointers of how to do your best and what things you should be focused on. So let's move on to the next question. Is the pricing structure attained age, issue age, or community rated? Great, that's fine. Depending on your state, the company, you can find that out. I'm not going to spend a whole lot of time on that. How large is the company's block of business in that state? Could you imagine, with your automotive insurance or your homeowner's insurance, before you picked the plan for your homeowners and car insurance, you called those companies and asked them how many cars they have insured in the state and how many homes they cover? That simply is not going to yield you any information that you can make a plausible decision on. That is something that is out of your control. What you want to focus on is what is in your control, and that is in no one's control to find that information. Does the company have a history of closing blocks and reopening under a different underwriting company? You will not avoid that. All big national companies do that. There's no way around that. Some companies that will not are your regional carriers or state-based carriers like your Blue Crosses, Blue Cross Blue Shield. They are an association. Every state operates independently. So let's say, for example, Blue Cross Blue Shield of Texas or Blue Cross Blue Shield of Florida, now known as Florida Blue. They have one block of business for one state for those residents. Those don't tend to change because they don't have the buying power or the organizational structure to launch a new brand and retire a brand and launch a brand. They're just simply in their state. What you'll find is if these, let's say Blue Crosses, to begin with, their rates tend to always be higher. When we work with clients, we'll always compare Blue Cross and then let's say United Healthcare, Cigna, or now known as HealthSpring, Mutual of Omaha, Aetna. So we're always going to compare the big household names. And 9 times out of 10, I can't actually give you an example where Blue Cross is cheaper. So they're always more expensive because they don't do the block opening and closing, but they're starting higher. So the national carriers like Aetna or HealthSpring that will open and close a block are way more competitive to start with than most of the Blue Crosses. So what are you going to do with that information? Aetna could open and close a book, but your starting rate is lower than a Blue Cross. So there is no way, and I don't care what anybody tells you, there is no way to understand future rate increases amongst any carriers. None. There's no way to figure it out. The only way that you would know that information is, let's say you're on a plan and the block or the book has 100,000 people. Nobody knows what the risk level is of 100,000 people at any given time in any block of business with any carrier in any state. So it matters to a degree, but it is nothing that you can do. You will not research. You will not find a company that is sneaking around offering lower rates and not doing this process. It's the industry. You can't change it. Don't spend your time talking about businesses closing and opening block of business. It won't affect you, and there's nothing you can do about it. Let's move on. Does the company tend to maintain competitive rates as clients move into their 70s and 80s? Again, that's ludicrous. How is a company going to know what their rates are a year from now, 2 years from now, let alone 10, 15, or maybe 20 years from now? Don't bog yourself down with that type of a silly question or do any research around that. You can't control that. The company doesn't know. It's fogging your brain and making you more stressed out. Moving on, what is the company's financial strength and long-term commitment to the Medigap market? I believe that is very important. In 2025, we saw a company called Ace and Allstate, which you know Allstate very well. Ace and Allstate entered into the Medigap market a few years ago. Very low premiums, very competitive. Well, guess what happened in 2025, around mid-year? They closed the block of business, so they would not take any new membership, period. They didn't rebrand. I think Ace tried to open a new block under a new name. My point is that longevity in the market does matter. And we have a rule in our office now, after what we saw with Ace and Allstate, we will not recommend a company to any client unless they've been in the Medigap market for over 5 years, a minimum of 5 years, because these companies are coming in as the baby boomer rush floods the Medicare system. They want a piece of the pie, but they can't sustain. These brand new small companies try to come in and undercut the big United Healthcare and Mutual of Omaha. Yeah, their premiums are lower to start, but they can't maintain maintain the claims ratio to premiums that are coming in. You can't come into a market and be the cheapest on the block and expect that you're going to be smarter and more efficient than a gorilla in the room like United Healthcare. It'll never happen. So company financial strength and long-term commitment to the Medigap market, absolutely. Stick with the company over 5 years. The next question is the company actively enrolling new 65-year-olds, or has the block likely been closed? That doesn't really matter. If the block is closed, you'll never even be able to encounter that brand to get a price. So that to me doesn't make any sense. If the client needed to move later, how aggressive is the company's underwriting compared to other carriers? I don't know really why that matters unless it means move plans. There's so many variables that go into moving from, say, a plan G to a plan N. It's hard to predict that because it's going to be based on your age. Your location. Are there any birthday rules that allow you to switch plans? Does your state have an annual open enrollment period that lets you move amongst carriers? That would be what I would focus on, is what are your state-based rules to allow you to switch Medigap companies any time of the year, which is a national feature. You don't have to wait to switch Medigap companies to a specific open enrollment period. But if you want to change from a G to an N or vice versa, after your initial enrollment period, you could face underwriting depending on your state. So the key there is understand what your state's underwriting rules are, or guaranteed issue rights, or does it have a birthday rule? Not about the company's aggressive underwriting from plan change to plan change. Yes, that could matter, but that's such a granular situation that there's no way you'll ever figure that out. So understand the state rules that allow you to switch plans in the future, whether there's underwriting required, or if you have a birthday rule or a GI window of some kind. That kind of concludes my Reddit ramble for today. What I'm trying to do is help people simplify this process, okay? This is an overwhelming amount of information for the average consumer to try to figure it out. The very first comment after these suggestions are made, someone posts, "Where would I find all of this information?" And you can't. A vast majority of it does not exist. If you wanted to get really specific, you could call your state, the Department of Insurance for your state, and ask about rate increases in the past for any one particular company. That is a lot of recommendations of information that 75 or 80% of that is out of your control. You can't do anything about it. Nobody can. So what I would recommend and focus on this, if you've decided on a Medicare Supplement and you've ruled out Medicare Advantage, hopefully you've ruled out Medicare Advantage because Medicare Supplement is far superior. If you've landed on the Medicare Supplement train, find the lowest cost Plan G or Plan N in your area, or high deductible Plan G if you want to really save on monthly costs. Pick a company that's been in the market over 5 years, a household brand name that you are familiar with, and find out which one is the most competitive. One of the things that's not listed here that's very important is find out if different companies offer a different household discount if you and your spouse both apply. Many of these national companies will say, here's your premium of, let's say, $150 a month. And oh, by the way, if your spouse applies with you, or if you live with someone over the age of 60 that's qualified as a caregiver in your home, we'll give you 5, possibly 10% of a premium discount. Every company's different, and that varies by state. So ask about household discounts if the two of you were to apply. Beyond that, finding a reputable brand, affordable premium, verify with your state if you wanted to change later what those rules are. That's something we could actually help you do. If you call us and do a needs analysis, we pull up your state and we say, your state has these rules, and here's what you can do in the future, here's what you can't do. So again, pick brands and names you've heard of, that you're well familiar with. If you've never heard of the name and you're being told that it's significantly cheaper than every other company, that's a red flag. You can get on it at that lower premium, but there's a likelihood that that block is going to increase more because the pool is so strong, so small, and so new to the market. It's very, very immature or young, that there's no way that a company can come in today's environment and undercut United Healthcare, Mutual of Omaha, and Aetna that aggressively and maintain that. That will never happen. There is never going to be a company that's new to the market that comes in that is smarter than these companies that have been in the industry for 40, 50, 60 years. So pick a brand you know and you trust. In terms of blocks of business, future rate increases, moving, all of this other stuff that you can't get the information on or narrow down, don't stress yourself out about it. Get on a plan. The most powerful thing about Medicare plan selection is Medicare Supplement will give you the most control over your health. There are no referrals, there are no networks, there are no prior authorizations, there are no plan changes annually. You cannot lose the plan as long as you pay your premium. If you're comparing Medicare Supplement to Medicare Advantage, all of that is the opposite. Medicare Advantage has prior authorizations. Medicare Advantage benefits change every year. Medicare Advantage contract is 12 months. Nobody realizes that. Every Medicare Advantage plan on the market renews with CMS every 12 months. And there's a laundry list of reasons why a company won't renew. And it all boils down to profitability. If a company is not profitable in your county on Medicare Advantage, they can terminate the plan and send you out to the market. Yes, you have a guaranteed issue right, but that sends you in the market and it starts the whole process all over again. With Medicare Supplement, you do not have any of those features. As long as you pay your Medicare Supplement, whether the company closes its block or not, you keep that plan for life. As long as your premiums are paid, you keep the plan for life. I hope this helps. I hope this allows you to kind of shed some of the excess research off and just focus on the basics of what a Medigap plan is. If you have any questions, if you need to talk or do a needs analysis, let us know in the comments or give us a call. We'd be happy to help. Take care.